Hello everyone and welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. Returning back on the program is Frank Holmes, CEO of U.S. Global Investors. Frank, thanks for joining us.
It's great to be back.
A big announcement of sorts that you've been putting together, at least will be an announcement to my audience, and that's the creation of U.S. Global's ETF for the airline industry called JETS. What can you tell me about the airline industry right now and your expertise in the energy sector, how that will relate into this ETF?
Well, there's several common factors. The big part is that the energy is such a key factor to airlines and jets. And it's always made me interested, and I fly so much. Last year I flew 100 times, and I've probably booked, I think the number looks like about 8 million miles on commercial airlines in the past 20 years. So one of the things, coming back on the sort of jets theme and airlines industry, it's going through a renaissance. It reminds me of the mining sector that's going through a restructuring, and many of these companies, 70% were bankrupt a couple of years ago. They've now canceled 25% of the flights, so therefore there's a shortage, we say, of optionality for you to be able to go fly wherever you want, when you want. They've raised the fees. They've restructured the size of the jets. There's more seats on them. So they're doing exceptionally well. And with the drop in oil prices, these stocks have gone and to have a fantastic run. In fact, it is so interesting to me that the largest airlines in the world, the CEO of American Airlines, announced last Thursday that he will take all of his compensation in stock, not cash. And that's a very strong vote of confidence in that sector. So it's a great sector to hedge against your energy holdings. American Airlines is unhedged, but interestingly enough, many of the other airlines are 50% hedged.
Frank, I want to play devil's advocate here because I don't understand the airline industry, but I know you have a good answer to this question. If you look at a couple of the airlines like Southwest and maybe Alaska Airlines, their charts have gone up so quickly in the past year that one could call it parabolic. And what you're saying, I think, is that there's a very good fundamental reason for that mixed with the oil price. What do you say to that?
It's a great question. The big coming back on that sort of thought process, that they've already had a great move. It reminds me of 2003 when energy stocks in PetroChina, which was Warren Buffett's the largest shareholder outside of the Chinese, and the Canadian energy stocks had already doubled and tripled. And the U.S. energy stocks, the big caps, they'd gone nowhere. Oil had finally gone through $50 a barrel, and everyone woke up and they started getting into following U.S. oil companies. And with that, oil went higher prices, and these stocks all then had a spectacular run. It reminds me that the domestic airlines that did not have any financial problems, like the JetBlues, like the Southwest Airlines, have done exceptionally well with better processes and management, and they've had this move. But the American Airlines has just had that move as a restructuring. What is important is that there's going to be a shortage of pilots. They can't expand their capital. They can't expand their paths. And one of the issues that Warren Buffett's always spoken negative is that every time these airlines CEOs had positive cash flow, they went out and spent stupidly. They can't do it now. There is a real shortage of pilots. They've had to extend the retirement age from 60 to 65. More pilots that were coming out of the U.S. Air Force are flying drones, not wings. There's been new rules and laws that a pilot has to have 1,500 hours. That costs $150,000 of training. A lot of kids can't afford that. So that the ability to be silly with this new cash flow the airlines have is not going to happen. They're going to be much more prudent, and we're seeing that because these companies are buying back their stock. They are increasing their dividend. American Airlines pilots are now making $300,000 increases in salaries. So I think it's a renaissance, and I think that we're going to see the ability for these airlines to maintain very robust, strong cash flow. And what we've seen this past quarter, when you compare to last year, is a five-fold increase in cash flow. They've gone from an industry making $700 million to making $3.5 billion. And I think as we go through each quarter, for the next 4 quarters in particular, you're going to see a wake-up call, because this industry, which is a subsection of the transport industry of the S&P 500, trades at one half the multiples of the railways and the trucks.
A few minutes ago, we were talking about the oil price. It looks like it's put in the bottom and it's recovering a bit. How would a rising oil price play into or cut into some of these airlines on their cash flow moving forward?
That's another excellent question. Well, what's interesting about everyone except for Allegiant and American, Hedge. So even with the oil falling, Delta had to take a charge because they bought their own refinery. And they hedge. Alaska Air, which I've owned for a while, is they hedge 50% or 47% of their costs, and they roll it out for 12 months. So I think what's going to happen is that these companies are repositioning their book, and so they're going to be locking in hedges if oil then rallies back. And I think if oil was to get back to around $70 a barrel, it's much better actually for overall the stability. So just think about that. These stocks had a great move prior to oil falling from $100 a barrel. They had a wonderful move when you take a look at JetBlue and you take a look at Southwest Airlines and Delta. American, it had lots of difficulties in staying with United, but that's all changed now. So they run a very balanced model of hedging that cash flow.
Frank, before we jump into the commodity sector at large, when is JETS, the ETF, going to be launching, and how can investors find out more about the product?
Okay, yes. Well, the product launch takes place this Thursday on the New York Stock Exchange. I will ring the bell on Monday on the New York Stock Exchange, but it's funded now, and it will start trading Thursday morning. The symbol is JEPS. It is predominantly 80% are American airlines and airlines industry companies, and 20% are foreign companies, foreign jet companies, and also manufacturers and some airports. And it has enjoyed a spectacular compounded rate of return for the past 1, 3, and 5 years. The airlines are all announcing this quarter great results. So I think there'll be lots of enthusiasm since there's no other ETF product to be able to track this industry.
Very good. Moving on to gold, I want to talk about central bank purchases. Let's start with China because there's always this big unknown of how much China is actually buying, and you have to dig deep into the numbers, and the numbers vary. So what are you seeing coming out of China central bank purchases?
Well, first of all, I think globally central bankers are net gold buyers. Two, even with Russia, with all of its currency issues and sanctions against it, they still had record buying of gold in the open market. So it's interesting to see that's how they're defending their currency, and that's what's very important for what China is doing. China is continuing to be record consumption of gold, and the big push there, strategy-wise, is they want the renminbi to become a global currency. They tried a few years ago, but to be recognized as a global currency, you had to have basically gold behind it. And then the biggest exporter has been the dollar. So now we're starting to see that the Chinese is pushing for special drawing rights for the IMF, World Bank, that their currency get recognized like the U.S. dollar. So from that end, I think they'll continue to be a buyer of gold as they position this currency for as it's truly an alternative to the U.S. dollar. They will also create their own form of a world bank. They have a policy to export their banks and their banking finance capability for infrastructure building. They're incredible road builders. They have leading technology and machines for building railway lines and for building roads. So they're now financing with infrastructure banking to go throughout Southeast Asia, India, Middle East, North Africa. So there's a real strategy and a push by the Chinese to become a world power financial currency. And they need gold to do that.
Yeah, and you mentioned Russia shortly there. I find it interesting that last year, when the ruble was going through a currency crisis and interest rates were hiked, the U.S. media was putting a lot of negative focus on Putin and on the Russia situation. But what most Americans don't know is that the currency's actually been one of the best performing currencies this year. Interest rates are starting to be lowered back down. And as you mentioned, Russia's buying gold again. So how are you seeing things play out in Russia?
Well, I think that Putin is on his propaganda push, and he has these 4-hour calls. I mean, it's tough listening to some politicians, but can you imagine for 4 hours? And I think that he's trying to weather the sanctions that have been that are against Russia. We'll see how it unfolds, but as their strategy is that they've reached out to China. They're going to have a super railway built from China all the way to Moscow and St. Petersburg. It'll be the longest uninterrupted railway construction, which will cost tens of billions of dollars to build. And I think that this is his path. Partnering with who were before like enemies on trade. So now he's partnering with the Chinese.
And finally, we were talking about India before we got on the line here. There was, of course, the tax on gold that was put in place last year. What are you seeing on the consumption side for India? Is there a lot of gold still being accumulated there?
Yes, it's interesting to see that Modi's come in and he's instilled lots of confidence that we're seeing fund flows going into their own domestic stock market, and we're also seeing consumption of gold doubling from a year ago. Right now is a special holiday, or it's actually like a sort of ceremony. It's a propitious time, a prosperous time to buy gold for gift giving in India. So it's expected to be between doubling and tripling from consumption of a year ago. So I think that it's important to recognize the love trade that takes place with China and India. And what the math has shown is that the GDP per capita of China and India rising is highly correlated to the consumption of gold. And what we are seeing is in China, in particular, in addition to India, is a huge rally in their stock market has created tremendous new wealth. There's something like 52 new billionaires in China because of the stock market going up so greatly. And what does this mean? In new prosperity, and people end up buying gold as gift giving. So I think that these are all positive signs for a very slow, continuous consumption of gold based on the love trade.
And final question here, Frank, on the side of the mining equities, because that's a big topic we talk about here at Palisade Radio. You know, a lot of the companies, Barrick, for example, still under pressure getting their balance sheet together. Newmont, on the other hand, is looking like they're turning around, as are some other companies. What's a couple companies that you're looking at, and what are they doing in order to take advantage of the bear market rather than suffering along with all of the rest?
Well, there's no doubt Barrick's under attack, and the pension funds in Canada are after the board of directors and management. It's a no confidence vote, and so there'll be change there. Seems that Newmont's got its act together. Many of these CEOs have been poor stewards of capital. You can show that up to 2007, they were showing tremendous returns on capital, actually higher than the S&P 500. Then they went on this acquisition binge, and they destroyed their returns on capital. I think confidently that many of these companies are refocusing on these returns on capital. But what's happening to do that is that they're cutting back on exploration development. So they're going to have to be acquiring small cap and mid cap companies, which have been expanding. And I think companies like Klondex, which were big shareholders and believers of management, they've done exceptionally well. They're producing this past quarter, I think, over 32,000 ounces. It's a pretty profitable business. So I'm very thrilled about seeing that company and their CEO not only communicating regular with the public and the shareholders. I was in Toronto, and there he was making a presentation to the GMP high net worth customer base. And then he's at a gold conference. At the same time, he's at visiting the properties, making sure that they're having the highest capacity and margin profits per ounce of gold. So this is good. And I think companies like him will get bought out. I think that the weak dollar in Canada has benefited Agnico Eagle. It's a benefit of Cisco. I think that Dundee, which is in Europe, in euro terms, the euro being weak, that you're seeing gold hit all-time highs in euro terms, in Japanese yen terms. So there is a gold bull market taking place in these other jurisdictions. And I think that many of the Latin countries have currencies have fallen against the dollar, so they've become more profitable. I think that this is going to help in the next 4 quarters showing up in many of the gold producers that have most of the production coming out of Canada or in emerging countries.
Frank, it's always a pleasure getting you on. I know that Thursday is going to be an exciting day for you, ringing the bell there on the stock exchange and launching JET. This interview will probably air after that happens. I'm sure there'll be a video up for everybody to take a look, and I hope the best with the launch of the ETF there.
Well, thank you so much. And I think, as I mentioned earlier, a real pivot move is very seldom do you get the largest market cap company saying, like the CEO of Newmont saying, okay, don't pay me any income, just pay me in stock. And that is what the CEO of American Airlines announced last Thursday. So I think that's a very bullish statement for not only his company, but also for the industry. People have done that before who are leaders in their industry, as Larry Ellison from in the technology space, from Oracle, Steve Jobs did it at Apple. So it's a very strong vote of confidence for that industry.
There you have it. Thanks so much, Frank.
Take care. Happy investing.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, troll, did you hear what's going on in Yemen? Or are you too stupid?